Hey y'all, it's CJ here. Welcome back to my channel. And today I'll just be doing another short video on my sentiments on the market, what's been going on. Like, I think I'm recording this video on Monday, and it's President's Day, and I think the stock market is closed today. I haven't really been investing as of lately. I've been just, like I said before, just paying down my credit cards and trying to get my debt lower, because I believe that's an important step that you need a necessary step that you need to take before actually investing. Like, I understand like Roth IRAs, traditional Roths, and the 401ks, because that's very important as well, and you need that, and you can distribute a certain amount of money to that, to where you can manage that as well as your expenses and other bills and stuff. But that is really important to take care of. So the market has been all over the place lately. I don't think it's really bottomed out yet. I think it could possibly fall more. I think it was one day last week, I think it was either Thursday or Friday, where it was a pretty red day in the market. The Dow was down like over, at one point it was down over 600 points, and that's nothing to sneeze at. As well as the NASDAQ was down over 100 points, and the S&P 500 was down a lot as well. And it's been some good buying opportunities for whatever stock you may choose to buy. Like, and it's always a good time to buy stocks. There's really no bad time to buy stocks, but it's been really good lately. And I just want to say, I think the market could fall. It could very much fall more with everything that's going on. It's Tuesday now, and I just want to look at the market really quick. And as you can see, it's a really red day. Some big buying opportunities out there. The Dow Jones is down around 600 points. We're still in market open. It's like 1 p.m. Eastern Standard Time. The S&P 500 is down about 66 points, 66.81 points. And the NASDAQ is down 243 points, as well as the Russell is down 25 points. So it's a pretty red day. A lot of buying opportunities out there. So let's look at some of these articles. It's from CNBC. So stocks fell Tuesday as intensifying tensions between Russia and Ukraine dented market sentiment to start the week. And this has been going on a while. The reason that they're justifying the market crash, that Russia whole Ukraine thing. The Dow Jones Industrial Average dropped about 600 points, dragged down by a 9% loss in Home Depot. The S&P 500 fell 1.4%, and the NASDAQ Composite slipped 1.7%. The U.S. stock market was closed Monday due to President's Day holiday, which was yesterday. Stocks sold off broadly after Russian President Vladimir Putin said Monday that he would recognize the independence of two breakaway regions and Ukraine, potentially undercutting peace talks with President Joe Biden. That announcement was followed by news that Biden was set to order sanctions on the separatist regions of Ukraine, with the European Union bound to take additional measures. Putin later ordered forces into the two breakaway regions. The Van Eck Russia ETF, a U.S. traded security which invests in top Russian companies, dropped more than 11% on Tuesday. The Russia-Ukraine situation remains very fluid, and tensions remain high, and in short term they will remain a headwind on stocks, said Tom Essay, chapter of Seven's report. UK Health Minister said Tuesday that the invasion of Ukraine has begun. U.S. President Joe Biden has not yet used the word invasion to describe the current activity. The UK has also started targeting economic sanctions against 5 Russian banks and 3 wealthy individuals. The news came after the White House said Sunday that Biden has accepted in principle to meet with Putin in yet another effort to de-escalate the Russian-Ukraine situation via diplomacy. White House Press Secretary Jim Psaki said the summit between the two leaders would occur after a meeting between Secretary of State Antony Blinken and his Russian counterpart, Sergei Lavrov. I apologize if I'm butchering these names. Biden will deliver an update on Ukraine and Russia Tuesday afternoon. Oil prices rose with West Texas Intermediate futures jumping 3% to 95.19 cents per barrel. The Russia-Ukraine conflict has put pressure on market sentiment recently, with the major averages coming off of back-to-back weekly losses. The Dow fell 1.9% last week, and the S&P 500 and the Nasdaq Composite slid 1.6% and 1.8% respectively. While Monday's episode will have important implications for Russia's political relations with foreign partners, a significant market event is likely avoided for a time being, but the trajectory in the coming weeks will be important to monitor from a rising market risk perspective, said Ed Mills of Raymond James. Earnings and data. Home Depot reported quarterly profit of $3.21 a share, 3 cents better than the estimates, and said it sees earnings and revenue growth this year. The shares, however, fell more than 9%. Yeah, they're the 52-week low below. Like my notification went off this morning. Meanwhile, Macy's dropped more than 3% despite being on the top and bottom lines of its quarterly results. Macy's also authorized a new $2 billion share buyback program and announced a 5% dividend increase. So traders are also keeping an eye on the Federal Reserve, as the U.S. Central Bank is expected to raise rates multiple times starting next month. Traders are betting that there is a 100% chance of the Fed rate hike after the March 15th to the 16th meeting, with expectations tilting toward a 0.25 percentage move, according to CME Group's FedWatch tool. Expectations of tighter monetary policy have put pressure on stocks, particularly those in rate-sensitive sectors like tech, and have sent Treasury yields sharply higher to start 2022. The benchmark 10-year Treasury year ended last week around 1.93% after briefly breaking above 2%. The 10-year began 2022 trading at around 1.51%. So that was an interesting article. I mean, it's nothing really new. I mean, besides Home Depot and Macy's, reporting their earnings and stuff. But I mean, this whole Russia-Ukraine thing has been going on for a while. I mean, we've been known about the Federal Reserve, about the raised interest rates. So, okay, let's check out this one. Corporate pricing is boosting inflation, but we're still buying. On recent earnings call, massive corporations have posted huge profits and promised continued price increases, even as inflation continues to rise to rates not seen in decades. For example, Starbucks celebrated a 31% increase in profits at the end of 2021, but it still plans to hike prices this year. The New York Times reported earlier this month Tyson Foods, the meat processing behemoth, raised its prices 19.6% overall, driving record stock prices for the company. Inflation, meanwhile, hit a 4-decade high in January, with the consumer price index increasing 7.5% of the past year before a seasonal adjustment. Although prices dropped in the energy sector for goods like gasoline and fuel oil, every other sector, including medical care, apparel, transportation, food, and shelter, saw increases, resulting in the largest overall 12-month increase since 1982. Some of that's to be expected, with COVID-19 still throwing kinks in the global supply chain. The challenge of getting goods and materials where there need to be translates into increased prices for both good companies and consumers. Meanwhile, consumers have increased purchasing power due to wage increases and stimulus benefits like checks, child tax credits, and low interest rates. And at least in the US, they've proven willing to pay higher prices. At its core, those are the necessary ingredients for inflation, demand outstripping supply. But some economists and politicians say that corporations are using inflation as an excuse to jack up prices beyond what's necessary to account for increased costs. More than just passing those costs on to customers, they say corporations are taking advantage of unprecedented global economic circumstances to increase their profits simply because they can. Politicians like Senator Elizabeth Warren and Sherrod Brown have recently drawn attention to what they say are outsized price increases made worse by anti-competitive corporate behavior. What we are seeing today is a naked exercise of oil producers' market power. He wrote of rising energy prices early in February, knowing that their days are numbered. Oil companies are reaping whatever returns they still can. Biden administration economic advisors, too, are disputing that message, as the Washington Post, Jeff Steen, reporting on Thursday, messaging about corporate concentration leading to higher prices is currently a live debate with the administration. President Joe Biden himself, under immense pressure to address inflation, has pointed out market consolidation in a few industries, but it hasn't gone so far as to blame for the longer-term inflation the U.S. is experiencing. This isn't a new issue, Biden said last month. It's not been the reason we have had high inflation today. It's not the only reason, but over time it has reduced competition, squeezed out small businesses and farmers, ranchers, and increased the price for consumers. But critics of the major corporate price increases are arguing that consolidation is the only force driving inflation, rather than because these conglomerates hold so much of the market share. They are able to rise prices out of step with actual price increases they're incurring and passing on to customers. Essentially, that they're using the current inflationary environment as an excuse to raise prices more than necessary, because they don't have competitors to drive them to keep prices down, in turn contributing to the problem of inflation. Corporations have high pricing power, driving costs higher and contributing to inflation. Companies are currently being rewarded for price hikes with higher valuations and stronger revenues, so there's little incentive for them to stop doing so, even if prices aren't justified by increasing costs to corporations. Some prices raises are to be expected. There are increasing costs to supplies, transportation, and labor, but customers or consumers don't have a way of knowing how these increased costs factor into price increases, and that's something we'll likely never figure out, he said. The preconditions for the price hikes we're seeing today long predate the pandemic, Owens told Vox via email. Companies are able to take advantage of a crisis like the pandemic precisely because these foundations were set in place long before the crisis itself. In a corporate earnings call after the corporate earnings call, executives are using inflation as a cover for egregious price hikes to boost their own profits. What a surprise. Warren has highlighted the meat industry as an egregious culprit, calling for a Justice Department investigation to the industry practices. Tyson is abusing their corporate market power and ranking in profits by jacking up meat prices. She tweeted earlier this month, "I have long argued that we need to enforce our antitrust laws to break up monopolies and promote competition, and now is more vital than ever as tool to fight inflation." The Biden administration has planned to inject $1 billion to smaller independent meat processors to drive meaningful competition in a meat market after a White House Economic Council analyst found gross profits of the top 4 meat processors soared 120% over the course of the pandemic. Capitalism without competition isn't capitalism. It's exploitation, Biden said during the January unveiling of his plan. That's what we're seeing in meat and poultry industries now. The only thing that will stop corporate price increases in the short term is if people buy less one way or another. In the short term, corporate price hikes aren't going anywhere so long as people are still willing to pay higher prices. It'll last and be sustainable as long as there is no pushback from consumers, he said. Essentially, if the price increases that are being passed on to consumers don't weigh demand, then businesses will continue to push on prices. For the time being, that likely means the Federal Reserve will have to address inflation. Over the past year, the Fed has repeatedly signaled that the stimulus measures it put in place to aid recovery from the pandemic, buying up government bonds and keeping interest rate low, would have to be reversed to counter inflation and get it back to the central bank target rate 2%. So we know that the Fed is expected to start raising interest rates, and they're saying even more by March of next year, and that UK is already begun to raise their interest rates. But yeah, I just wanted to check out a couple articles to kind of read to y'all what's been going on in society and the world regarding the markets. I think it's been some great buying opportunities lately. I think there's more to come. As long as you just don't put all your eggs in one basket as well. Don't spend all your money just on one red day. If you see if you see something's down and it's at a good deal according to your research, go ahead and take advantage of it. But you don't want to spend all of your money because the stock could go down further, the whole market could go down further. So you always want to keep a little bit of cash on the sidelines. You don't want to spend all of your money just in one go, in one sitting. So that's something to be mindful for and to keep in mind. But yeah, I just been paying down credit cards, preparing for some things. I'm actually headed to class right now. But I hope all of y'all have been doing well. I would like to hear some of y'all thoughts on the market, if y'all think it's gonna continue to crash or correct itself, or if y'all think that last week was pretty much it for the market. I just want to know kind of y'all thoughts and opinions on it down in the comments below. And I hope everything has been going well for y'all in 2022. We're still going to have a fantastic year. I hope you achieve everything that you set as far as your goals. And you should continue to set new goals and take smaller steps to achieving those bigger goals. Because if you plan it and you believe it, you can achieve it. So my whole thing is just plant your seeds, water them, watch them grow, and just continue to strive for something greater and not just get content and comfortable with a position that you're currently in right now, because you can always go higher, you can always increase. And if you're not striving to do better, then what are you doing? So as people, we should be trying to get better and better every day, every month, every year. You should not be the same person that you was a year ago. You should just evaluate your decisions, evaluate just yourself as a whole, and see where you can improve it and see where you made errors at, because as humans, we're going to make mistakes. And Daniel says, he's like, life is 90% of how you react to something and 10% of what happens to you. So it's mainly about how you react to different situations, to different things. It's less about what actually happens to you. So that's just something else to keep in mind. But I hope y'all enjoy the rest of y'all day, wherever y'all at in the world, and just be blessed, be safe, and just know I love y'all, and have a wonderful rest of your day. All right, peace.